Hey guys, what's up? Good evening to everybody. Buenas tardes, buenas noches. Good evening, good afternoon. So hope everything is fine. Today we're gonna do a back testing. I'm not gonna make entries today. I will do just I'm gonna select a random week and then I'm just gonna analyze it for a while. But also I'd like to see before I started. Let me check an analysis I did in the in gold for some students before. But where is it? There was few days ago. Oh gosh, here it is. Look, this is analysis we did. And this is what actually happened. Well, it seems that the price went to the direction we expected. That was we continued with the bullish impulse. However, it didn't get to the decisional. This was our entry point. Or should it enter later? Maybe later. All right, 4 hours. Oof, no. Anyway, but just look the reaction it got. It was actually the reaction we expected. It entered in this point and this order block. It go down, then it went just to the take profit level, and it can continue with the movement. Actually, it would be really cool if this would work, but it didn't, unfortunately. At least we had the direction clear, and that's something that we need to bear in mind, which is cool. Which is cool. Right. So let's go and let's do the analysis. All right. I don't want to analyze the gold. I don't usually execute orders in this pair. It was because last session someone asked me to analyze it. What I want to do is the next. So I want to save it in the watch list. Add some, yeah, to the watch list forex. Yeah. Right, so I'm just gonna analyze the pairs I like to practice with, which is the euro and the New Zealand dollar. To make this thing random, I'm just gonna select again a random week, and then I just gonna analyze that week and the type of entries we got for that day. So let's analyze May. Wait, what time is it? Where I am now, it's 2:20. So let's go for the 2. So the month number 2, so February. Let's go to February the 20th. No. Okay, let's go for that week. So I can analyze this complete week. I mean, from January the 6th, February the 16th to Sunday the 22 or Saturday. So let's go. Let's analyze it. Perfect. So let's do the exercise. Let's analyze this properly. I will analyze I'm gonna create a context for it, and then after creating the context, I will take a look to the market itself. Okay. So New Zealand dollar. Let me check. How is it? Right. All right. So I'm gonna go back in time and I'm gonna analyze the beginning of the range in this pair. Here is this is the range beginning. And this is the supply zone because it's a selling zone, so that's why I'm just gonna put it here. Right now, I'm just gonna select this. This is the strong high or the highest point. Then we have here a break of structure, which is a boss. Boom, boss, break of structure. And well, after this, the price done the next. This is the lowest low. This one is the lowest low. Right, perfect. So what's the thing here? The price is actually, well, in this impulse. Oh, where is it? In this impulse. This is the daily impulse, right? And this is a retracement. But the price actually reacted, I think, in this order block, which is located here. Yeah, on this order block. And after the reaction of this order block, the price is actually consolidated in a daily time frame. However, we are bearish, but this is a bullish retracement. Look, boom. It covered all this area. So on a daily time frame, let's put it here. Let's put the context here. The context. On a daily time frame, we are bearish, but we are in a bullish retracement. Bullish, right? Oh no, wait. Bull red, bull red. Bullish retracement. Okay. It means that yes, the main trend line is bearish, but still we are in a retracement, right? In a bullish retracement. So look, main trend line bearish, boom, and then this is a retracement. All of this is a retracement, right? So well, the price is just reaching to those areas and it's having a reaction here. So we're gonna see what's actually happening in lower time frames. Let's see. In 4 hour time frame, 4 hours. 4 hours looks extremely bearish, as you can see right here. So the beginning of a range in 4 hour time frame is this. This is the beginning of a range in 4 hour time frame. Boom. And I put it in blue since it's the demand zone. Build, yeah, zone. Right, here it is. Zone. So, gotcha. And this is the beginning of a range in 4 hour time frame. So in 4 hours, we are bullish. This is the importance of making this context. So in 4 hour, we are bullish. And this is but we are in a bearish retracement. Bearish. We're in a bearish retracement, right? So what is the meaning of that, right? It's evident that this is the range beginning, right? But we're starting with a retracement. Still could be like a slight retracement and it kept continue with the bullish retracement in a daily time frame, or it could be a profound retracement. We need to see. So anyway, this is the reaction, and also we need to spot the next, and it is that the price is actually reacting in order blocks like this one. This is a 4 hour order block. Oh no, wait, no, the price is reacting even in a lower one. This one, here it is. Here it is. This is a decisional, and it's getting even valid because, so this is the 4 hour time frame. 4 hour order block. Perfect. Excellent. Now let's go to 1 hour time frame. 1 hour or 1 hour time frame. Yes. Now what I'm doing actually here is that I'm looking for the beginning of the range in 1 hour. I think this is this is the range beginning. Look, here is the beginning of the range in 1 hour. Here is where the range started. Here it is. Bam. And then we got this boss. Right? So look at the next. This is how we start analyzing this. In 1 hour time frame, as you could see, the market started having a reaction here. This is the range beginning. Continue with impulse. It was good. Then it started a retracement, and supposedly it should have continued, right, with the bullish impulse. But Since it didn't happen, the price simply go up, had a retracement. This retracement was actually very profound, and look, now we are bearish in 1 hour time frame, right? We're bearish. This support area that we are in a we are actually in a 4 hour retracement, bearish retracement. That's what I want to say. And then we may have opportunities to sell until certain decisional points in 4 hour time frame. That's it. All right, now let's keep analyzing. So once the price got broken with a bottom of the candle here, it became, we need to find our strong high. So our strong high was, we're in actually very interesting zone. Our strong high was this one. Yeah, this one was our strong high. This one right here. It means that this high will be likely respected, right? But look what happened. After this reaction, and the price continued going down, the price had a super bullish retracement, and then boom, changed the direction. Now this low became the bullish strong low in 1 hour. Why? Because with this low, this high was broken. But also I need to see if this low is backed up by something, and it is. Look, this low is backed up by this order block here. You see? Now this is the logic to understand the ranges. Interesting. So after this breakage, now the price is pushing down, making a retracement. Now let me change this because actually we are bullish in 1 hour time frame, and we are now in a bearish, in a bell red, in a bearish retracement. Bell red, bearish retracement. That's it. So this is the new impulse in 1 hour time frame. Is this one? Boom. I already marked the strong low here. This one here, and this is the bell red, the bearish retracement. Now currently the price is actually reacting on this block. Here, and now we have here two possibilities to understand the price. So since this is bullish, right, 1 hour is bullish, 4 hours is bullish as well. So this may happen that the price can continue with the bullish impulse, right? Ideally, because this is a lot of liquidity accumulated, right? So ideally the price should continue, right? However, since we're very close to a 4 hour order block, let me show you here, like this. So the price may have a reaction in 4 hour time frame, then go down, and then continue. That's what I think. So that's why we need to understand that probably in 1 hour time frame, at certain moment, probably, I don't know, maybe on this in this order block, on this order block, on this selling order block, the price can go until this point and continue going down, right? So this is why it's so important to draw the context. Once we got the context clear, for us it's easier to understand how the price behaves. Right, anyway, I'm gonna stop there because that was like the main context I wanted to understand, right? In which the price was located. Now, as I said before, my idea today is not to execute any order, but analyzing, understand the market movements during the previous week. So let's go and see. I'm just marking here the beginning of the week, Friday, blah 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 blah. Here we have Sunday. So this is all the movement that occurred the previous week. Actually, very interesting. Patience. Patience is the key. Hmm. So now, my friends, what we're gonna do is the next. Um, let's keep analyzing what is actually happening in the price. All right, so let's analyze the next. So as I said before, so this is the beginning of the week, and the week continue with the what? With the 1 hour bearish retracement. So this was the bullish impulse the previous week. So the next week the price decided to make a profound retracement. This is what actually happened. So all the opportunities that we had in the market were selling orders practically. Now, to understand why it happened, let's try to understand the next this point here. Why the price decided to stop the impulse here. So if you look back, the price is actually reacting on an order block in 1 hour time frame, which is this one. Yeah, it's this one here. Question is, why did the price decided to enter here? Let's see why, because we need to understand why. So since this is a for daily order block, right? In 1 hour time frame, it made the breakage of the 1 hour time frame, and then the price went to the confirmation point, which is this one, and that's why it had this reaction. Give me a second, guys, please. Right, let's keep moving with the analysis. So, as I was saying, that's why the price reacted there. Ideally, I think it should have been reacted. The thing is that there was a lot of highs, this high and this high, so that's why the price needed to take the liquidity of those points. Anyway, so once we got this, we need to go to 5 minutes order block, to 5 minutes time frame, excuse me. And here we need to understand the reaction. So in 5 minutes, when we have a reaction in 1 hour, we would look for a confirmation in 5 minutes, and the confirmation in 5 minutes simply is the breakage of the 5 minute range. Uh, maybe this may work, but I don't like it. So confusing. Need a clearer one. But I think this one may work. This, what I'm gonna point here is the 5 minute range. No, I didn't like it. The thing is that I like the things that are very, very precise. Since this is not precise at all, that's why I don't like it. It doesn't mean it can't work because it works. But oh yeah, so 15 minutes, it should look better. Yeah, in 15 minutes is much better. So look, this, yeah, it's back up, yeah. So look, now in 15 minutes, sorry, in 5 minutes, this is the range, this is the range beginning. Here is where it begins the movement in 5 minutes. Liquidity sweep, break of structure, the impulse continues, then you got a reaction in a 5 minute, in a 1 hour order block, and after that, the price continue going down. So when the price break it with a body of the candle, here it is, then so we have a confirmation. Right now we are bearish in 5 minutes. With this confirmation, we can start looking for selling opportunities, right? Now, this is what actually happens, and this is what we need to understand. The most accurate order block to sell, from my point of view, could be 2 points, two order blocks. First one is this one, and the one I like the most because it's the one who has liquidity prior the entry point, right? And also it has an imbalance, a really big gap. Now, so by Sunday, it wasn't respected. And the second order block I like a lot is the one which is closer to the price. It also has an imbalance, a small one, and also has liquidity. And of course, it's valid because it's the closer to the current price. Now I gotta mark it, and you need to understand why the price reacted there. There you go. So on Friday, that was Friday, but I know what time. It was Friday 12th of the midday. The price had a reaction. Excellent. So look, all this order book was actually respected through all the week practically. Boom, boom. Right. So this is the first order we may have at the market. So honestly, my friends, I wouldn't have used that opportunity at that moment. So I'm gonna analyze continuation. So this is the first continuation order that we may have in the market. So continuation. Continuation in 5 minutes. What is the meaning of continuation? So we're just continuing with the breakages in 5 minutes time frame. That's it. And look at the next. So once we got the reaction here on this high, this became the strong high in 5 minutes. And let me check if it was respected. It was until this moment, but this was made to confuse everybody, right? Every one of us. And the 5 minute range was the next. Was the beginning was this one. Ah, yeah, here it is. Look, here it is. So if we should have followed the first reaction, which is this one, which is the 5 minute order block, this one, we will be able to enter here perfectly. Right, so after this we have a breakage, and this breakage confirms the continuation. So we should have put our order block here on this block, which is that down here. And probably at this point we'll be out. Let me check how many pips we will have at this moment. Here, I will have put it, this is the highest high. Yeah, 4 pips, 4 pi. Okay, if we want to be very conservative, 8 pips, but I wouldn't put the order in that place. However, this was the order, right? This was the order, and this is the actual result. Okay, that was on what day was this? Oh, that was on Tuesday. We're just looking for continuation orders. Right, let's go to 15 minutes. Right, here it is. Perfect. Now let me analyze something that we didn't analyze. That it was the 15 minutes range. So when we were doing the exercise, I just analyzed until the 1 hour range or 1 hour time frame, and I didn't check for the 15 minutes. So this is the 15 minutes range beginning. Here it starts. Here it is. Oh, reacted lower. Well, yeah, it reacted in this order block nicely. All right, and when we got this breakage with the body of the candle, it would mean that we are out from the 15 minutes range. And this is what actually happens. Look, the price entered here and it took us out. Perfect. Now let's try to understand the next movements of the price, which is this one. And after this breakage, we will understand that this is the 15 minutes range beginning, also the 5 minutes range beginning. This high right here is the 5 minutes range beginning. And now we need to understand possible reactions in the market. The second reaction that we got is the next one. Look, the price enter on the decisional that we got here. This decisional. Here we have it. The supply, perfect. This is the supply area. And yeah, that's why the price reacted in this point. It didn't touch it at all. No, here it is. Yes, yes, yes. Look the order block. Here it is. It's this one. Yeah, because it's the one who has prior liquidity. So the price entered here. It was on London session, I think so. Yes, and then it continued with the 5 minutes range. So 5 minutes breakage. Now look at the next. This is the 5 minute range beginning high. This is the breakage, and now the price led another opportunity here to buy in the decisional in 5 minutes. Here it is. This decision is actually very, yeah, it led this liquidity and then it entered here and continued with the movement. Then after that, we just have to keep updating in 5 minutes time frame. All of these are continuation. This is a continuation in 5 minutes. In 5 minutes, 5 minutes continuation. So we have second order here, and then we have a third order here, which is another continuation pattern. Very cool, very understandable, let's say. Right after this breakage that we have here, this boss break of structure, we would need to analyze the last low, which is this one. This is the low, the lowest low, and then the price create another one, which is this one. Perfect. Now, would this become the strong high in 5 minutes? I wouldn't say that, because here is a lot of liquidity. So this, no, that way, sorry. This high here and all of this is liquidity. So that's why I wouldn't use this as the highest point. And then we have here a decisional. Decision, is there an imbalance? Kind of an imbalance. This is the cap. So I would select either this order block here, which is the one I think had the reaction. Yeah, this one, or this one. But the problem with this one is that we have a lot of liquidity trapped here, so that's why I didn't like it. So I selected this one. So this is the decisional, and this is the one who continues with the 5 minute range continuation. So this is another continuation order. Five minutes. Right, so this is how it works. Very cool. Very interesting. Perfect. So after this, the price led this low. But look where the low is. Now I think the price has hit an important low, an important 1 hour low, or this is a 4 hour low maybe. So that's why at this moment I would have stopped here, because this is enough, right? This is enough. However, the price provided us a second opportunity to keep selling. That was here, yeah, on this order block. Here it is, just for a few bips. Oh no, yeah, here it is. There you have it. it reacted here, and boom, it continued going down, right? So what happened after this? And this is something that we need to understand. We're in 5 minute time frame, and everything looks very bearish, very bearish. That's right. So, but when the price gets to a 1 hour time frame, 4 hours, whatever, the price get huge reactions like this one, and that's why by the end of the week, let's say Friday, the price stops respecting the bearish ranges, and now it starts having like bullish impulses. But it is because um, it's reacting. I think this is a 1 hour order block. So we were following all of this 5 minutes order block continuation orders, which were really nice. But um, when the price get or hit the high time frame, like 1 hour or 4 hour time frame order blocks, when then we should be cautious to stop and watch the full screen again, not the full screen, like the big picture, which means the big time frames to understand it. Right, now let's keep analyzing a possible entry. So now I'm gonna use this indicator, which is the right now the New York and the London session indicator. So let's see. By Monday on London session, we got this opportunity. There isn't any opportunity. So there wasn't any opportunity. So all of this was liquidity trap. So Monday London session and New York session were made to trap people, right? Practically. So all of this from here, now I'm gonna use it differently. From this high to this high here was liquidity. So all of this was made to trap people. So people started selling, 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 and at a certain point in Tokyo, this is in Tokyo movement, and then in London session, boom, in the sky rocked, took all the money of the people who were selling here, and then boom, this was London session. It went down, and this is the movements that we got sometimes freaked out. So when it started the New York session, all the movement that the price made in London was recovered, retested this zone, the selling area, and then boom, it provided a real impulse, which is this one. Right. Now that was an opportunity on Monday. Sorry, on Tuesday. Then on Wednesday, well, this was London session, so this was opportunity in London session, and then in New York session, the price provided this opportunity. This was a continuation order in 5 minutes, and I think it would be really valid to use or to enter the market. So this one was the opportunity in New York session. What should I bear in mind? The London, the excuse me, the New York session opportunities, because it's the session in which I work. If I worked in London, I would use London opportunities. Simple as that. So four pips. Yeah, I would say 4 pips would be 5 pips would be okay, and then I should have put the order up to this point here, and it would be like 125, 129. Yeah, 129 risk reward is actually extremely good. Nice. So that was in New York, and if I have missed this opportunity, maybe I would be able to put this order here. But I need to, yeah, and it will be open by London session on Thursday. So if I have let this order, like if I put a sell limit order here, I would have take advantage of the movement as well. But let's say, yeah, I don't know if I would have put this order here, I wouldn't have put the set limit order because that would be enough for me. But let's say that this was another opportunity. I would have used the same take profit limit like this one. It will be a 128. Very cool. And there was a London session that was on Thursday. And what happened here? Then we got this opportunity at 10.5. Well, yes, this will be another opportunity. Well, if I would be encouraged enough, I would have selected this order here. I would have seen this. What is 7 o'clock? 7 o'clock, 9. Yeah, I would have put an order here. Yes, it would be more risky or riskier definitely because the price has already got to this point. But I would have put it in case I don't have in the case in which I wouldn't be able to select another opportunity, and I will put it until here. That's it. And then it get to the fair value gap, and then it started the retracement. Now the retracement is valid definitely, but it should have broken the strong high or the beginning of the range in 5 minutes, and it allowed another opportunity. So look, once the price broke this with the body of the candle, this one, yes, um, we should have looked for the range beginning, and it would be not this one. Oh no, yeah, that one. That what will have been the range beginning. So after we have this breakage with the body of the candle, this boss, that was at 11 a.m. on London session, in New York session, I will be able to find a continuation pattern. Yes, here, this is the decisional, and this will be another opportunity. Wow, so this week we got plenty of opportunities to buy in the market, to sell and buy. Here it is, that one. I didn't like. No, I wouldn't use it because I would you enter in the 50% of the gap like here. hmm So there you go. There you have it. All right, so we got one, two, three, four. Four possible opportunities. That's a lot. To execute orders on this pair using just one simple method of entry, which is the continuation pattern entry. Good. Now I'm gonna delete all of them because I will analyze a second chance, a second opportunity, and I'm gonna do it in a minute. Right, so give me a sec. I'm gonna come back in a minute to keep analyzing other different possibilities in the market. Right, give me a sec, please. Guys, you hear me now, right? Perfect. We'll see what happened with this. All right. Now it's time to analyze another type of entries that I execute on the market. They will be called the booster method orders. So let's see. Now I'm gonna mark here the order block trumps. This exercise is just to help me understand a little bit more how the price behaves and how possible is for me to take or not to take some orders that I like to see. So here's another opportunity. Boom, there is one. So here is another booster possible order. Both, both places here. Both here. There's another one. Mm-hmm. Then we got another possibility here. Okay. Here, and that's it. So one, two. Okay, this is a third one. Didn't spot that one. Three. Mm, no, it wouldn't work at all. No, it's this one. That was already late. Already late. Yes. Interesting. Mm-hmm. And this is in Tuesday. Tuesday, yeah, I would have marked some of them. This one, I would have fallen into this one. Yeah. Now let's go on 1 minute and I'm gonna analyze the different type of entries that we have here. Right. This is an scalping method order. You already saw the intraday method that I use. Now I'm gonna analyze the. I'm gonna see possibilities with the scalping method. This is a scalping methodology I use as well. So when the price hit this order block, which was the order block trump, I would have looked for the range beginning that I think will be this one. This is the range beginning, 1 minute order block. Here it is. Apply. And then I will have put this is the range beginning here, the beginning of a range. After this would have been the liquidity prior the entry point. Oof, not too many liquidity, too much liquidity. Mm, this would have been the beginning of a range, or here. Yeah, this one is much better. Yeah, much better. This is the beginning of a range. You continue going down. Then this is the decisionals. All of this is liquidity, and it would have used. This is the imbalance, so the price would have reacted on this one. This is the entry by decisional. This one. Oh yeah, it worked. So it did work. Excellent. So I would have put the order here. Boom. Stop loss above the second order reaction. Mm, this one. All right, this one I would say. How many pips do I have here? 2 pips. 2.5 pips. Perfect. And I will have put the order block or the stop loss minimum to this low here, and then we got 1 to 5. And I think we have put 1 to 7 or 1 to 10. Let me check 1 to 10. Alright, there is. Yeah, success. So I will have this order. I will have put it. That was on New York session, and it worked perfectly. Nice. Yeah, because this was too much liquidity. I didn't realize that this was a lot of liquidity. So even though there was a beginning of a range, it was extremely forced. So that's why I discharged, and that's why I selected this order block, and boom, there you go. Then I had a reaction. That was on 1 to 10. Great. Then it happened of this movement, same session. Then the price hit this zone. Let me check what I would have done. What time was that? Oh no, this is too late for me. All right, no orders here, no orders. Perfect. All right, now here we are. Boom, the price reacted here. So that was at 8 o'clock. So yes, I will be able to work at this time. Now I will have looked for the range beginning, which once it hit this one, no range beginning, no range beginning. The range beginning would be really far, which is this one. No, this one. Yeah, that one. Yeah. Then we have the balls, the breakage, perfect, and continue going down. Yeah, but let me check one thing here. What day is today? This is Tuesday. Oh yeah, yeah. This is another opportunity. Look, this one. It's an order block trump. Order block trumps just work if you have really clear the direction of the market. Otherwise, you will be trapped, as the name says, order block trump. Right? See now here. Mm-hmm. Here it is. So here's the order block trump, and I think this is the possibility by of that day. So since the price reacted actually on the order block, let this and provide me this opportunity, I will have put the order here, here, here. Supply, and the price would have let us in scene with our opportunity of what of an entry. So that was the first one. We weren't able to take it. Second one, when the price enter here, I would find the range beginning. No range beginning. Now it will be really late. So, and this will have become a continuation. That's why it worked as a continuation pattern. Yeah, it worked as a continuation, but it has sense why. Perfect. What time was this? 11. 11, and then we got another opportunity here at 11 a.m. So where is the beginning of a range? Hmm. Hmm. It's a little bit difficult to find, honestly. I don't like this. Yeah, this is not really range beginning in. This will be the range beginning in 1 minute. Once the price get to this point, I would look for possible entries. Would this order block would be this order block? This order block. Actually, it's actually very honestly, it's very confusing in this moment, which would work. Imbalance, okay. Liquidity, perfect. Liquidity, right. So the price entered here, but I'm not so sure if I would have entered here. Entered here, this zone, yeah, and that's then the price continue. Honestly, I don't know if I would have entered here. It's too, it's too. I mean, there is no plenty of liquidity here, and this is also liquidity. Yeah, so it's actually difficult to say. All right, maybe I would have done the next. I would put an order here, consider this as a liquidity, and I will have put the order in that block here. Yeah, and then I will cover these two. Yes, in 2 minutes. Maybe in 2 minutes it would look better, but not so sure. Yeah, now let me check if in 2 minutes it looks much better or not. 2 minutes time frame. Hey, it looks much better now. This is the imbalance. That's why the price take it as a liquidity, but still is not enough, honestly. No, 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 no. No, I wouldn't take this order. I would have select this one. I would have selected this one here. Why? Because we have here an order block, which is fine. Is back in this up, but this is too close. This is too many highs, and this is the imbalance. So I would take all of this as a liquidity, and I would have entered right here in the extreme order block. So that's why I wouldn't have put an order there. So all right. Anyway, but it worked. This beginning of the range worked as a 5 minutes 5 minutes confirmation order block, which is actually cool. Now let's go and let's watch another possible entry with this method. Now let me check one thing. Boom. Right, right, right. Let's see. Where is the analysis I was doing here? Yeah. Boom. Here it is. Perfect. So once the price entered on this block, I should have entered here and look for the range beginning, which is yeah, I think it will be this one. This is the range beginning. Boom. Away with this one. There you go. Liquidity sweep. Boom, boss. Okay, this is a little bit of liquidity, and this is the entry point. Imbalance, and all of this is more liquidity left to the market. So I would have entered right here on this. there, and I will have put the stop loss above the high, which is here, there, and I would let the order to the closest low, which is this low, so I would have put it here. Perfect, and this would be a 1 to 6. I would extend it a little bit to get a 1 to 7. There, 1 to 7, almost. How much pips do I have here? 3 pips, 21 pips. There you go. The order should be successfully done. And now I have a second opportunity here because the price led this, which is another possible entry point. It took all of this as the range beginning, boss, and then this one has liquidity. Liquidity, more liquidity, and an imbalance. All right, so this one I would have put an order, but with more, you know, much more afraid. Yeah, because I would need to put the order here, boom, and then I will have to cover this imbalance. I don't know if I would be that exact to put this. I would, yeah, I'm not so sure. Maybe I should have gone to 2 minutes and then validate if that would be a possible entry point. Let me check if I would have done that. Yeah, in 2 minutes, much more. It's a huge gap, so I don't like that gap. But oof, nah, I'm not so sure. I think I wouldn't put the order there. No, I would have put it better in a different place. Like, well, I think here above. Yeah, above, like here. So this order wouldn't go to plan, but still it would work. It would work at that point, but I would be out probably. Anyway, that's why I didn't expect to earn that much on this entry, because as you could see, it gets to the order block that has the reaction here. So I wouldn't able to go to 1 to 10, would I? Let me check. I think I won't. Oh my gosh, super exact. I would got it. Yeah, super exact. I would have the 1 to 10, but I wouldn't be that keen to let the 1 to 10 maybe. Anyway, that's the result of that order. Continuation, perfect. And then we have here another opportunity. And but this is Thursday. I wouldn't be working at that time. Would I be working at this time? Oh yeah, 6:30. Oh no. Okay, this is an opportunity, but I wouldn't be able to take it. Maybe this one, 7:35. Maybe this one, yes. Okay, let's keep moving. So that was Thursday. Bam, bam, bam. Okay, Thursday. This is Friday. So by Friday, no, this is out. Okay, we're gone. Oh, or maybe here, range beginning 1 hour. Boom. And that's it. Right, so this will be the possible entry points or possibilities I would have used using the scalping method. First one, this 1 to 10. Second one, what is the second one? On Tuesday, there wasn't any opportunity. Okay, we didn't have any chance here, unfortunately. No any chance. Wednesday, yeah, Wednesday. Any chance? This was on Wednesday, but this would be the only chance. But this chance would be in 5 minutes time frame, not in the with the booster method. Right. And no. And then we got another opportunity on Thursday, 6 a.m. Oh yeah. No, I wouldn't be able to take a second one. I said, all right. And then the reaction here. Maybe at this point we will be able to take one, but it will be too late. Right. So analyzing the market this way, we would have like four or three possibilities by continuation method, and then three possibilities by booster method. All right, very interesting analysis. So we're gonna finish this back testing session here, and I'm so glad that you could be